So here there's the private credit fund. You can see over on the right-hand side, total net assets right now of almost $17 million. It's funded 28 loans with 9,699 investors. Now, currently, right now, they have a $5,000 investment limit for October. So, I think they've got a lot of funding right now. There's a lot of people jumping into this. So if you want to invest more than 5,000, you're just gonna have to wait, but you can put in 5,000 right now. Let's talk about some of the highlights. The historic yield is 8.1% annualized dividend paid. The target yield is basically 7 to 9%. It's going to depend on what the market can provide. Now, Arrived is basically the loan originator and the loan funder for people that are doing projects. We're going to talk about the kind of projects here in a minute, but that's so depending on what the market can bear for them to be providing these loans to people doing their projects, that's going to be the annualized dividends coming back to us. Now, also, I like this. There's quarterly liquidity available. Now, that is something that's absolutely not guaranteed, but they're providing that quarterly. And I think it's after 6 months that you've invested, you could take advantage of that quarterly liquidity. It says a diversified pool of real estate backed loans, and they have monthly dividend payouts. I like that. If you're investing on their platform on just the single family houses on the equity side, you might be sitting 5 or 7 years before you get any sort of, before you can exit the property, but you will be getting payouts, monthly dividend, not dividend, but rental payouts on the rental income. But that can also go flat when you have a vacancy, or if you have property repairs, you might not be getting any dividend payouts. On this, when they're basically investing in a number of real estate projects, and the term of these projects, I think, are 6 months to 36 months. They're going to be turning over all the time. These projects are going to be funding or paying off their loan, and that's how that provides that liquidity or that, the dividend payments back to us. So this is right here what it says. If you invested $10,000, how the structure would break out. $10,000, the net interest earned would be $1,090. The operating costs and fees would be $240. So you can kind of do the math on that. Their credit loss accrual, they're basing that at $40. And the dividend that was actually paid was $810. So that's that 8.1% return on your investment. I think that is it's anticipated. So I will have to caveat that does say anticipated, but that is what they're paying right now. Like I said, the type of investments, there's going to be new construction. They're doing bridge loans and then renovation. Bridge loans are basically short-term loans. To say you own a house and you're going to buy a house. You can get a bridge loan to finance the purchase of the new house while you're still selling your old house. They're short-term loans. They can also be done for some construction projects, but they're typically very, very short-term, like 6 months is your typical term on the bridge loan. I know there's some that can be shorter or longer and they can be extended, but that's kind of the idea of them. It's just for short-term, in my experience, has been in residential sales when you list a property and then the person finds their dream property and they haven't sold their property yet. They need a bridge loan for that. And then, of course, renovation.